Hi, I'm Peter Rose, founder of Longwood Currency Trading. That's my second video of the day, this great May 21st, 2020. As I had mentioned in the other video that I did, talking about why I address a 21 to 34-year-old group as opposed to us old people that are 50 and above. I happen to be 70. It's just the weather has changed up here in New England from being basically miserable to this gorgeous days that are in their mid-60s, and we're going to get mid-70s today. It's really, really nice. So I've just came out from behind the trading desk and thought I'd wander around the house here or the land and just sit down and have a chat with you. I'm going to get up because I've been sitting here for 15 minutes doing my last video. Kind of give you a view of the yard here and the house. And boys and girls, this is what it's all about. This is why you work your ass off when you're young, so that you can retire and pay cash for something like this, so you don't have a freaking mortgage. And you can, it's fuck you money. That's what it is. That's what I got from my real estate investing. And I was able to buy this house and pay cash for it, and then put another $40,000 into renovating it. It's 1775 Antique Cape, beautiful house, 2.7 acres. I love it. I worked my ass off to get it. But you know what? It took me 40 years to do that in real estate investment, because I lost $1 million net worth twice due to economic collapse and stuff. I made that money back each time, but geez, it took me 10 years each time. So that's why I discovered the currency markets in 2007, been studying them ever since. And 2017, I thought I knew what I was doing and lost all my money. And so now I got a small account and I know what I'm doing. And so as soon as I sell my last building, I'll refund my large account and we'll get on with this thing. But from a percentage standpoint, based on risk, I'm doing really good. So that's why I'm doing these videos and these blogs, try to share my experiences with everybody. I'm not running a training business. I'm not soliciting anybody to come and bang on my door and plead with me to teach them how to trade, because I'm not going to teach you. Because most of you probably don't want to learn and do the work anyway. I mean, I know that. I've been teaching karate for 50 years. I can order people around and tell them what to do because their lives depend on it. This is just fucking money. But in martial arts, it's your life. I'm teaching you skills that's going to protect you when somebody's coming in to bust your ass. So you better do what I tell you to do. In currency trading, I can't do that. And I don't want to either. It's your money. If you don't want to learn how to properly manage it and use it and invest it, well, that's your problem. But I don't want to make it my problem. I don't want to take people on as students and have them not do what I ask them to do and then piss at me because it didn't work. Of course it's not going to work. You don't do the work, or you don't do what somebody tells you to do, it's not going to work. Go do whatever the fuck you want to do. That's your option. I hate to be so negative about it, but man, I've talked to so many people that want, and need, but they don't want to do that work. I got no sympathy for that. I'm sorry. 50 years in the martial arts has hardened me. One of the things that I wanted to talk about today was patterns, and not to trade patterns. Again, these videos and my blog posts and all of that stuff are not for the real beginner student. I mean, anybody can teach you what a pip is or how to, oh, there we go. Somebody roaring by on their modified truck. It's a process of learning the basics, the fundamentals, the plumbing somewhere else. What are you going to do? You're going to pay me a lot of money to teach you how to do the basic mechanics of trading? You know, when I have a student, there's a book that I recommend. You read the first 50 pages of it, and you know all of the mechanics and the plumbing that you need to do. Now, that doesn't mean that you can do any of that stuff, but at least you know it. It's the background of it. It's like learning how to drive a car. You sit in the classroom and they tell you what an engine is and the gas combustion and where to put the gas and how to step on the brake. Well, that's fine. So you get all the information. Somebody's still got to show you how to apply it. That's what I want to do. They show you how to apply it. So none of the videos or posts or anything that I do is for a beginner. And talking about patterns in price action is obviously not for a beginner. Although there's a lot of people teaching out there that teach patterns. And a pattern is like a head and shoulders pattern, okay? Something like that. Or a flag or a, you know, look, here's the deal. All patterns are based on past information. So that pattern that formed in the past, there's no guarantee that that's going to be replicated in the future, because that pattern was formed most likely by a large institutional trader that's trying to dump out $2 or $3 or $4 billion client position. And so he's running that stuff up according to the current liquidity in the market, according to the time that he's got from the client in order to get the order distributed, based on the amount of that money, how long it's going to take him in order to find the weaknesses in the market so that he can take advantage of them. So the pattern that campaign forms isn't going to be like the pattern that is formed next month when he has a similar order and there's different conditions. Now, I'm speaking from some amount of authority on this because I've got a bachelor's degree in physics, and I spent 33 years as a senior software engineer writing complex computer programs, so I kind of know how this stuff works. And I've also written thousands and thousands of lines of computer simulation code in order to run iterations of all of this stuff. Let's take the head and shoulders pattern that I mentioned. Just because that forms today based on that guy's or woman's client needs at that time doesn't mean that it's going to be repeated. Now, the way that you run that money or the orders into the market, that's the larger the market, the larger the amount of the order, the longer the particular campaign is going to have to be. In the case of head and shoulders pattern, you're going to run that price up and then you crash it back down so you can pick up more orders. Then you got to run that price way back up to convince everybody it's going up, and then you run it way down and flush them all out so that you're satisfying your client, and then you run it up on the other side until there's nothing left, and then the thing goes boom and it crashes. That's what creates the head and shoulders pattern. So it isn't the head and shoulders pattern that's being replicated, it's the way that the order is being distributed that's the repeating thing. You gotta buy into the market to cash everybody out, and then you flush them all out the other way. That's a trading process based on an economic model, not on a technical thing that they call this thing a head and shoulders pattern. It's bullshit. Patterns change. How can you possibly trade them? I will guarantee you that if you took 100 traders and put them in a room that had some semblance of experience, you had some people in there that had 6 months or a year's of training, you know, maybe a third of those, and then you'd have a third that had a 2 years to 5 years of trading, and then the other third you might have that were really experienced. And then you throw, to those 100 people, you throw 10 charts up that had head and shoulders patterns, and I'll guarantee you it'd be a shitstorm mess as to how they all interpret the pattern, because it's all open for interpretation. Patterns are all open to interpretation. You know what's not open to interpretation? You know what's not open to interpretation in karate? Getting punched in the face. You know, Mike Tyson said everybody's got a plan until they get punched in the face. Well, you know, until you put your money on the line, put your bet down on that head and shoulders pattern, you think it's going to work. And maybe it does work to a certain degree. It isn't the head and shoulders pattern that's causing you to be successful at it. It's recognizing in that pattern the economics of what's happening that's going to create the next move. It isn't that the head and shoulders is forming some top so that it'll pitch pole off the end and collapse, it's because the order flow is done. The guy's done with his campaign. So the topic of the video is patterns change, so don't trade them. Okay? Don't listen to somebody that's talking about head and shoulders patterns, flag patterns, bat patterns, all these patterns. That's somebody that doesn't know how to teach. Or better than that, somebody that's trying to teach everybody. If you're trying to teach a rote beginner how to trade, how do you do that talking about the economic factors that are involved or the gut feel instincts that we as traders develop over the long term? How would I teach a non-real estate investor that this is a good piece of property to buy? I'd point to it and I'd say, well, you know, the foundation's in good shape and the roof is in good shape and the plumbing works and the electrical was done 4 years ago. And so those are the guidelines that you take to go and look at the house or decide to buy the house. So that beginner's going to go out and he's going to have a checklist and go, boop, 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 yep, I'm going to buy this house. Oh, excuse me. Then 6 months later, he finds out there's a fucking pig farm that's next door, and you know, whatever happens when you have a pig farm next to you, I don't know, but it's not going to be a good thing. We've got a guy that's got a sheep farm going on up here, and there's a house for sale next to it, and some dumbass that's not paying attention is going to buy that house next to that sheep farm. So if you've ever been with a bunch of sheep, you know you don't want to live next to them. So I mean, that's just it. Unless you grew up with that. All right, so look, I don't mean to be so crass. And, well, yeah, maybe I do. But if somebody's trying to teach you trading skills based on patterns, would you please just close the book and walk away and get a cup of coffee and take swimming lessons or something? But just don't do that to yourself. Just don't do that to yourself. In the meantime, there are some good books that are available out there that do talk about the economics, but they're tough to read because you actually have to think. They're not picture books, and because most people aren't willing to do the work. That's why 90% of the traders lose 90% of their money in 90 days or less. That's the raw fact of the thing. So, if you want to be part of the 90-90-90 elite club, a valued member of that club, then do what everybody else is doing, because that'll put you in a 90% chance that you'll fall into that group. If you don't want to fall into that group, you got to change the way that you think, and you got to find somebody to mentor you to show you how to change the way that you think, so that you're not putting $30,000 down on a house just because the roof was done 10 years ago and the plumbing is good, because that really isn't all you need to know. My name's Peter Rose, founder of Longwood Currency Trading. Have a great day, and have a great trading day.